Hello and welcome to the paid weekly recap for the week ending February 20th, 2026. I am Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the paid system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. Myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I also urge you to read characteristics and risks of standardized options available at the highlighted link at the top. If you need more time with the disclosures, please go ahead and pause the video now. Otherwise, we'll get into the recap for the week. First things first, the 10-year yield bottomed out just above 4% on Tuesday. We had a holiday shortened week with Monday off. Bounced back on Tuesday, Wednesday, Thursday, Friday, settled around 408. The normal range had been about 4 to 4.2 until Warsh was named, and then we got up into this 4.2 to 4.3 range. A couple weeks ago, we broke through 4.3 and have been trending down since. We found support again around 4%, just above it. For now, the 10-year yield seems to be stable, but the concern right now is that if economic growth stagnates, we may see lower interest rates. If at the same point we start seeing inflation, that creates that scary word of stagflation, where we have inflation, meaning that the Fed cannot lower interest rates to combat a weakening economy. Earnings this week in NVIDIA are going to be big for the market and especially for tech. Now, for the broad market, this past 4 days, we ended up with a little bit of a bounce back. We started on lows on Tuesday, held that 100-day moving average relatively well. We did test below and then bounced back to the middle of the range, just above all key moving averages, barely, with resistance right now really firmly at about 700. 7,000 for S&P 500 is a big level for the index. For SPY, roughly 700. Support around 675, and we're right in the middle. We got about 11 points to that major resistance and about 14 to the major support. So for this week, we're coming in a very neutral stance for the broad market. Each time it seems that this market could turn a dip into something worse, it gets saved. And on Friday, we had an announcement that the Supreme Court overruled the tariffs that President Trump had put in place. He immediately responded with 10% tariffs across the board, raising them over the weekend to 15%. But there seems to be an expectation that getting rid of these tariffs, declaring them unconstitutional, will spur economic growth and allow for the market to recover and maybe even go into a bull trend. But that story is not over yet. Even with them being declared unconstitutional, there will be time before any sort of resolution on repayments, refunds, etc., if they occur at all. There may be new establishment of new tariffs, such as ones that were initially set in place at 10%, later raised to 15% over the weekend. And we'll see where this all goes. But at the very least, it seems like there is maybe some information that this market can now trade upon. Knowing, though, that the tariff battle between the president and the Supreme Court and between the United States and other countries is not over yet. This does not mean the end of tariffs. It just means that for now there is a change to the tariff situation and the potential for implementation. Now, as I mentioned, NVIDIA earnings are going to be big this upcoming week. They come out on Wednesday after the close, and that's going to be big, in my opinion, for tech. So we look at QQQ. Did not hold the 100-day moving average a couple of weeks ago and has been struggling to get back above. A week or two ago, we tested, and then we immediately fell back off. Major support here is around 590. Resistance around 635. Further upside to get to the major resistance, but there's a lot of work to get there. We have this big consolidation area in December that has to get fought through. Now, if NVIDIA comes out with surprisingly bullish earnings and starts up that bull trend for NVIDIA, that may be a helping point. We've seen a lot of semiconductor bullishness overall, but AI names and big tech names have been struggling and lagging. NVIDIA falls in at least two buckets. It's got semiconductor elements to it, much like Micron and some of these other names that have been very bullish. It's got big tech elements to it, which have been lagging. And there's also a correlation in general for where this semiconductor demand is coming from to the AI side of things, the Palantirs, et cetera. So if we start to see more bullishness out of NVIDIA, perhaps that gives an indication that AI has more growth potential and we know that people are willing to bet on AI and invest a lot in AI, and there are concerns about the amount of money being invested in AI. But even with the amount of money being invested in AI, it's causing this concern that it's going to be all for naught or not for the return that people are would expect given the spend rate. So we'll see where NVIDIA goes. I think their earnings are going to be key. If they are weak, that may be a problem for the broad market, because NVIDIA is one of our largest semiconductor companies and has a very high correlation to not just, again, semiconductors, but also AI and a lot of other tech money flow. Then we have small caps, which have not been nearly as weak. That we tested the 50-day moving average. We've been consolidating, not really going anywhere fast. Looking at 270 as a major support, or sorry, resistance level, 255 as major support, and we're trading 265. So we're close to resistance. We've got firmer support, never really seem to be approaching that falling knife situation. And broadly, it looks like the market is investing in mid caps and small caps more so than the big tech names. And that's part of why tech is lagging and small caps seem to be performing well. And then finally, we've got the VIX, and we're back below 20%. We started the week above 20, tried to get below it on Tuesday. Wednesday bounced back above 20. And then Friday ended up settling just below 20. Now, this is starting to give a little bit more confidence to the bull, reducing a little bit of the fear out there. Overall, what we are seeing is that there's still a demand for puts. People are worried enough that they need to build up their hedge, and they're buying puts aggressively. What they are not doing is selling calls aggressively. And that may be a combination of not needing to finance a hedge that they are still building. So if there's still demand and need to buy puts, the primary focus right now for these investors that are buying puts is to hedge the downside risk and worry about the expense side of it later. As we rallied on Friday, we did start to see some call sellers, maybe starting to finance some of the hedge into the firm market, take advantage of the directional move of the market to sell some calls at a higher price. And that can help bring the VIX down if we continue to go higher and see more call sellers come in, buy writers of long stock positions and long index positions. But so far, that's got a lot of work to do. It also tells me that there's less of a ceiling to this market if we do break out above 7,000, and 7,000 is going to be a big level. But if we get above it, we have less open interest, less sellers of calls above that would slow things down from market maker hedging. All in all, we have continued uncertainty from the fundamentals, and it prevented me from looking aggressively at a paid trade this week, particularly with the Monday holiday, meant that our information came in a day later. And by the time it seemed like we had clarity on a direction for the market, it was really Friday. So we got a lot of new names coming out this week that we can take a look at from a watch list perspective. And as I look at that watch list, it'll dictate whether or not there is a new paid trade this week. And I expect there will be at least one. So we'll be looking aggressively for names Monday or Tuesday, and maybe have multiple this week, as we've had a bit of a slow period for the last couple of weeks as the market looked vulnerable to a potential gap down, which made it difficult to look for a bullish or even anti-bearish positioning in any of these individual names. But, to be fair, a lot of them have been working still. And so even though I've held off for paid, we've been finding great opportunities for the live trading room. Vlad's been executing a number of them in different ways, different styles, good earnings trades, good AI-focused trades. Make sure you join us on the weekly or on the daily, live trading room, both morning bell and closing bell. Morning bell from 9:15 till 10:15-ish Eastern time, and from 3 to 4 Eastern time for the closing bell. Talk through a lot of different ideas. We'll certainly address NVIDIA earnings and any other fundamental inputs that are driving this market behavior. And if you can't join us on the live trading room, or you want to reach out to us separately, I'm Keith at yellowtunnel.com, and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone, and looking forward to a very interesting week for the markets once again.